Abhishek Jain from Dolat Capital. Thank you, and over to you, sir.
Thank you, Janice. On behalf of Dolat Capital, I welcome you all for the Q1FY22 earnings conference call of Minda Corporation Limited. From the management side, we have Mr. Ashok Minda, Chairman and Group CEO, Mr. Akash Minda, Executive Director, Finance and Strategy, Mr. Neeraj Mahajan, Group Marketing Officer, Mr. Sanjay Gupta, Deputy Group CFO, and Mr. Vikas Duggar, Lead Investor Relations. We'll begin the call with a brief overview by the management, followed by the question and answer session. I will now hand over the call to Mr. Akash Minda for his office.
The conference is now being recorded.
You, sir.
Hi, good afternoon, everybody, and thank you so much, Mr. Abhishek from Dolat Capital for hosting the earnings call for Q1 for Minda Corporation. May I request our Group Chairman, Mr. Ashok Minda, to start with a few words, please. Over to you, sir.
Thank you, Akash. Good evening, ladies and gentlemen. I welcome you all to the Q1 financial year 2022 earnings conference call of Minda Corporation. I would like to thank you all for joining us on this call and hope all of you are doing well. The first quarter of financial year 2022 started on a subdued note as the country was hit by a second wave of pandemic, which also adversely impacted...
The person you are speaking with has put your call on hold.
Sir, you may go ahead. Mr. Mahajan had placed us on hold.
So, which was also adversely impacted auto sector, which resulted in demand slowdown and sequential recovery subsiding. Despite the challenging business condition, I am pleased to inform that Minda Corporation has been able to deliver a consolidated revenue from operation of rupees 559 crore for Q1 financial year 22. And Ebitda for the quarter stood at 31 crore and profit after tax of rupees 7 crore with a margin of 5.5% and 1.3% respectively. Customer centricity has been our ethos, and we have jointly worked with our customer during the challenging times. In order to service our customer better and with a positive future outlook, we continue to invest in expanding our capacity. And
the person you are speaking with has...
All this is helping us to increase our kit value and content per vehicle. We are working to achieve more product per customer and more customer per product. As Minda Corporation, we are giving utmost focus on electric vehicle space. We have received Business Award of Lifetime Order of rupees 230 crore in Q1 financial year 2022. I am extremely proud to share that so far in Q2 financial year 22, we have already built significant order book in EV space. These orders are from both incumbent as well as the new player in the EV space. In last few quarters, we have won order for our new advanced technological products such as smart keys, digital cluster, center console, antenna solution, DC-DC converters, battery charger, etc. I would also like to highlight this has been possible due to the foundation which we laid in our Spark Minda Technical Center and advanced engineering team few years ago. I am also proud to share that we have entered into a joint venture with Infact Electronics, a South Korean-based company, for manufacturing of vehicle antenna system, a segment which has tremendous growth opportunity in India as demand for autonomous vehicles and connected mobility increases. We have continued to maintain operational efficiency to navigate through the challenges faced by the auto industry. Our primary focus in these times has been to create a very strong order book, higher operational efficiency, increase free cash flow, and work towards disruptive technology. I would like to reiterate that Minda Corporation will continue to remain committed toward right capital allocation. With this, I would like now to hand over the call to Mr. Akash Minda, Executive Director, Finance and Strategy, to give further details how we are strengthening the business to enhance shareholder wealth. Over to you, Akash.
Thank you, sir, for your future outlook and inspiring words for all of us. Good afternoon, ladies and gentlemen. Thank you very much for joining the call today, organized by Dolat Capital for Minda Corporation earnings call for first quarter. I would refer to the page 3 of the presentation, which is already uploaded on our website. Your company, Minda Corporation Limited, is an organization having more than 3,300 crores of top line, more than 17,000 people, and have 33 plants and offices globally. We have more than 6 partnerships in the automotive space. I now move on to the next slide, which is slide 4. Here, I would like to share our focus on narrowing focus and deepening capabilities. As we see a triangle in the middle, this is our focus for enhancing the core, technology and digitalization, and customer centricity. On top, we are restructuring the organization by simplifying the structure over the last few years by merger of wholly owned subsidiaries. Introduction of CAM structure to focus on our key account customers and strategic customers, and of course, exiting loss-making subsidiaries. We have strengthened our leadership by getting on board rich knowledge and global exposure professionals, which have come across in various spheres. They're leading the organization to growth and of course deliver consistently and on growth aspects. On the strategic partnerships, we have delivered a successful TLA with the Israel-based two-wheeler ADAS company. We've also converted our TLA to a joint venture with Infac Electrics of South Korea. And also we have done an operational partnership with Phi Capital. And this is looking at the overall transforming of the Spark Minda Group, Minda Corporation Limited. I now move on to the next slide, showcasing our engineering capabilities. I'm very happy and proud to share that even in such tough times of Q1, Minda Corporation has filed 6 patents in this quarter. And more importantly, few of them are for our joint venture companies, which gives back technology to our joint venture partners also. As I've already shown this slide previously, we are ever enhancing our engineering capability in the areas of advanced engineering and electronics by strengthening our members in the Spark Minda Technical Center, focusing on electrical and electronics and lightweighting technologies, power electronics, vehicle access, electronic hardware, embedded software, product validation, mechatronics. I would like to proudly share that the foundation laid by us 4 years ago in Spark Minda Technical Center is now giving us fruits with the new order wins and conversions that we are seeing in the last quarter and the years to come. I'm also proud to share the two-wheeler ADAS partnership that we have done has now completed 10,000 successful kilometers on the testing validation of the roads of India in order to get the local adaptation and the environment. I would like to move on to the next slide, which is focusing on the electric vehicle space. Here as Minda Corporation, starting from the top, we are offering many advanced technology products such as connected clusters, telematics, die-casting for lightweighting, various sensors, wiring harnesses, vehicle control unit, battery management systems, motor controllers, DC-DC converters, battery chargers, and smart vehicle access systems. I am proud to share that most of these technologies are developed in-house by our own advanced engineering team. Other than motor controller and BMS, we have orders for all the products which are shown here. We have won orders from the incumbent as well as new startup OEMs globally. Just to share on the right, We have won orders from Ashok Leyland, Bajaj, Hero MotoCorp, Ola Electric, Revolt, TVS, BMW, Vidya. In the first quarter, we have won more than 238 crores worth of lifetime order book from these customers. I would also like to proudly share, in the quarter 2 so far, in the first 45 days, we have won orders from these customers and beyond to a huge amount in these product lines. One such example is the order one of Smart Key Systems of one of the largest OEMs, two-wheeler manufacturer OEMs in India. We will share the details with you in the quarter 2 and in the next days. Minda Corporation is now going to be a very prominent player in the EV space, especially in the homegrown technologies such as smart keys, and our focus is to increase kit value per EV. I move on to the next slide, the focus on sustainability framework and ESG. Of course, in the center, our board is looking at strengthening our ESG framework. We have created a core committee which has our board members of Minda Corporation Limited. There's a steering committee, and of course it has people from various divisions and departments in order to bring this focus all the way bottom up. We have a framework available which is developed by one of the big 4 companies who is supporting us in execution and planning of this of the ESG framework. Going forward, you will be able to see the framework on our website as well as on other forums. I now move on to the highlights for the FY22 quarter 1 and industry performance. Referring to slide number 9, on the slide you may see the key customers such as green, which are in color, which have newly added, which are depicting the EV space. I would again like to share here by geography. India still continues to be our focus area, and by end market, two-wheelers is about 50%, passenger cars is increased to about 15%, and commercial vehicle about 22%. From the business vertical, mechatronics constitutes about 60% and information connection system about 40%. I would like to highlight again, these numbers are not comparable as of quarter 1 and as well as quarter 4 because of the change in dynamics of the market. On the next slide, on slide number 10, on the highlights, our revenue continues to grow better than the industry. Electric vehicle manufacturers give strong lifetime orders of 238 crores. New business one exceeds replacement business for the quarter. We signed joint venture with the Impact Elex of South Korea. We have filed 6 new patents in quarter 1, and one such is in cyber security. Nearly 95% of our temporary and permanent workers are vaccinated, as Minda Corporation started a drive to vaccinate 100% of our staff, employees, permanent and contractual. I move on to the next slide to share about the Indian automotive industry performance. As we all can see, from quarter-on-quarter growth, the industry has degrown by 35%, whereas Minda Corporation has degrown by 29.5%. The year-on-year volume grew as last year was complete lockdown for most part of the quarter. Onset of second wave of COVID-19 had an adverse impact on automobile production for the quarter. The production volumes declined by 35.1% quarter-on-quarter to 48.3 million. Volumes were impacted by lockdown in most of the states and lower consumer sentiment. We remain cautiously optimistic for the remaining part of the year going forward. On the consolidated performance for quarter 1 FY22, we have posted a operating revenue of 558 crores with an Ebitda of 30.8 crores with a margin of 5.5%. Our PBT or PAT is positive in spite of all the challenges at 1.3% at 7.1 million rupees. Our exports helped up in the resilient business performance and better than the industry despite challenging macroeconomic scenarios. Our EBITDA margins stood at 5.5%. It is impacted by higher operating leverage due to second wave impacting the industry. Lower aftermarket sales, product mix due to lower commercial vehicle as well as aftermarket, and lag of commodity price indexation had adverse effect. Company continues to implement several cost control measures which are fixed in nature as well as permanent in nature. our focus is lowering our break-even utilization levels so we can cope up better with any revenue shocks which may come in future. I would like to also highlight that our share profit from our JV has increased over quarter. And from last year, there was a loss of about 5.8 million rupees. There's now a profit of about 2.6 million. And I would like to share here the concern of Minda, which has been always there, is now a turnaround story, and they're now coming positive, along with the order book. One thing I would also like to highlight that we see month-on-month recovery in sales, and we are cautiously optimistic that Q2 FY22 onwards, we will again start delivering double-digit EBITDA numbers, and by end of the year come close to about 12% is what we have indicated earlier. Moving to the next slide with the business vertical performances. If I start from the mechatronics, aftermarket and other division, our revenue has seen a year-on-year increase because of course last year there was complete lockdown. The degrowth in revenue on quarter-on-quarter is seen due to the second wave. Our EBITDA margin is at about 8.8% due to lower operating leverage and support by various cost control measures. I would like to highlight here that the capacity utilization at this division was about 60% due to higher exports from this division. Aftermarket impacted by this division and it fell by 41%, where we were seeing strong recovery in the aftermarket. Export continues to remain an engine for growth for this business as we have long and strong relationship with our customers. As we gradually recover in the economy, we are cautiously optimistic on the Q2 FY22. In the information and connected systems, this division, which is the wiring harness division, continues to be challenged in some respect. Our capacity utilization in this division has been below than 50%, primarily due to the domestic and two-wheeler customers in nature. This, of course, lower fixed cost adoption. Foreign commercial vehicles impacted margin on quarter-on-quarter basis. The rise in commodity prices, especially copper and lag in indexation, also impacted the margin. As we see gradual recovery, we hope and we are working towards delivering mid-range EBITDA numbers in Q2 and eventually take it to higher single-digit numbers in subsequent quarters. Moving to the next slide of business performance and order book. I'm again very proud to share that in the first quarter, we have won a lifetime orders worth of 1,281 crores. 50 crores comes from export and 238 comes from electric vehicle space. In the about 500 crores comes from the replacement business and the growth engine, which is 786 crores from the new businesses. In the mechatronics division, we have won orders worth 500 crores. In the information and connection systems, we have won 725 crores. In plastics and interiors division, we have won 53 crores lifetime order businesses, which are 100% new. And in others, this is more so on the ITS and other businesses that lead to about 1 million due to the government nominations to the truck manufacturers. The next slide, which is our joint venture update. I'm again very happy and proud to share that we have signed up the joint venture with Infact Elects from Korea for the antenna systems for the four-wheeler industry. And here I am proud to share that we've already won an order book of about 130 crores in the lifetime basis. Moving to the awards in CSR. Again, very happy to share that we have won many awards from the customers in this quarter. Plus, more importantly, we have various drives across India on plasma donation drives, COVID-19 vaccination drives, Arogya healthcare distribution, and of course, new school project under adoption. With this, I would like to conclude our presentation. Thank you very much, and now we hand over for any questions, please.
Thank you very much. Ladies and gentlemen, we will now begin the question answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Ronak Sarda from Systematic Shares. Please go ahead.
Yeah, hi. Thanks for the opportunity. Akash, first question on the under recoveries due to the commodity, cost increases and the lag impact. Could you highlight? What's the overall impact of those under recoveries? And do you have it segment wise? So what's for mechatronics and others, and what's for the information and connected systems?
Sure. Hi, Ronak. Thank you for your question. I hope you're doing well. Okay, Ronak, firstly, I would like to highlight that our lag in the commodities per se is primarily coming from the business vertical 2, which is the wiring harness division. More so, if you see the copper has jumped more than 80% in the last 1 year, and it still continues to increase quarter on quarter. So our quarter one, again, the copper prices as well as the other commodity prices have also increased. If you see again, quarter on quarter is 15% from quarter four to quarter one in the copper aspect. So here we have back-to-back arrangement with all of our customers. In some cases there are about 3 months lag, in some cases there are about 6 months lag. So this money is of course recoverable, but it is just a matter of time when we get recovered and paid from our customers.
Right. So what's the impact, assuming the commodity price remains stable from here on? So is it like more of a 200 to 250 bits kind of an impact which it has on the Ebitda side?
Yeah. So Ronak, the amount is about 6 crore rupees in the quarter one,
which is yet to come for all the inflation.
That's right. It will come in next quarter.
Sure. Right. Perfect. And the second question was on the electric vehicle order wins. Congratulations on that. It looks pretty a large number given how the volume visibility has improved in this segment. Can you help us understand more on what kind of products are we going to supply? Which are the big ticket items in here?
Yes, absolutely, Ronak. Thank you very much for highlighting that. Absolutely, it's a very proud moment for us, and we continue to give extreme and utmost focus to the electric vehicle space. Our focus currently has been on the two-wheeler, three-wheeler, and the commercial vehicle space. In the two-wheeler, we have won various orders from the large OEMs as well as the new OEMs, including the largest two-wheeler OEM, Ola, Revolt, Polarity, Bajaj, etc. Here, some of the products are legacy in nature, or rather, I would say more of premium in nature. Like we've been always sharing our vehicle access in two-wheelers. So the lock-in key is now being transformed into the keyless and smart keys. So I'm very proud to share that we have won orders north of 200 crores from the largest two-wheeler OEM in this quarter, which is just about 2 weeks ago. Hence, you do not see it in our presentation, but I'm very proud to share that. This is, again, as I mentioned, the foundation of the Spark Minda Technical Center that we did. So we are seeing the fruits now. Also to add, in terms of Ola, we have won orders, which is the electronic steering column lock, as well as seat latches. Again, these orders are already here. With the peak volumes as well as the lifetime, we see orders north of about 150 crores in this. Going on to our EV products per se, we have won products on the DC-DC converters, battery chargers, telematics from various other OEMs, including the new ones. In our wiring harness also, we have won orders in the electric vehicle space in the quarter one, which is reflected in the 238 crores that we show.
Sure. So just to summarize, the smart key order is not part of this 238 crores, but it is for an EV product from an incumbent player, right? That's what you said. Is that correct?
That's right, Ronak. It is not in the 238 crores. It will be coming in quarter two presentation. So this is from the incumbent player in the EV project of the incumbent player in the legacy businesses of Spark Minda.
And purely on the new age EV components like DC-DC converters, the chargers. So how large is that order book of this 238 crores? And what content does it, translate into? I mean, you would know the value and the volume, right? So just on the content, if you can highlight.
Yeah. So the EV products out of the 238 crores is about 170 odd crores.
Right. And what would be the content for this? I mean, we were talking about 6,000 to 7,000 rupee content, extra when we were talking about electric vehicles. So is this roughly, half of it, or?
No, this is about 3,000 rupees, you can say.
Sure. Right. And last question on the joint venture side. I mean, a pretty decent profitability despite, weak volumes during the quarter. So this is largely an inline quarter, right? And the numbers should continue over the full year period, or were there any one-offs which has, led to a profits here?
So, Ronak, of course, our endeavor is to improve quarter on quarter. So definitely that is our endeavor, and if again there is no such disruptions, we continue to perform in these lines.
Sure. Great. Okay. Thank you and all the very best.
Thank you, Ronak.
Thank you. The next question is from the line of Pritesh Chheda from Lucky Investment. Please go ahead.
Sir, one question on this lifetime order addition that we saw. So there was a 2,500 crore order, new orders, which you reported in FY21. And then in this quarter, there is a new business order of 800 crores. Now this totals to about 3,300 crores. Now this is lifetime. Wanted to know how much of it would be executed annually for this year and next year, which obviously should be a growth over and above the volume growth of the specific vehicle class that you operate in, right? So if you could help us understand that absolute value to be executable this year and next year, and how this 3,300 crore will eventually build up on execution.
Yeah, sure, Pradesh. Thank you so much for this. So, of course, there are various customers have different start of production timelines, some ranging from 6 months to even 24 months, depending on the vehicle as well as the overall dynamics. Definitely, volumes will come into picture when we go along, but I will be happy to get back to you in detail in terms of the build-up year on year for these order books.
Okay. Will a certain portion come in next year? Let's say about 1/10 of this, at least some 300-350 crore additional business to be executed will come next year, or these are all far-dated orders?
No, absolutely. It will start coming from next year, which is FY23. So yes, you can say around 1/10 of this will start coming. Of course, month on month and quarter on quarter.
Okay. My second question is, last year we started supplying for the wiring harness, and I think it was, if I'm not mistaken, it was a half year's supply of the BS6 product. So, first of all, is that correct that we had a half year number and hence we should get the benefit of the other half this year in terms of your top line?
So, Pradesh, excellent question. But I just like to share with you that no customer or no OEM manufacturer has reached the pre-2019 levels in spite of investing in the BS6 regime. The story still continues, and of course there are challenges now from the EV perspective. So though it's an opportunity, but when we speak about BS6, there are of course challenges in achieving the peak volumes and peak numbers for which the capacities have been set for all product lines for BS6. So gradually it will increase. Gradually they will go positive, but of course it will take some time.
Okay. Thank you very much, and all the best to you, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Trendlyne from Trivikaram Consultant. Please go ahead.
My question has been answered. Thank you.
Thank you. A reminder to the participants, if you wish to ask a question, please press star, then 1 on your touchtone telephone. We take the next question from the line of Mayur Milap from Boss Capital. Please go ahead.
Hi. Just about your new joint venture. So you said this is on the vehicle antenna manufacturing. Have we done any investments in this JV? What kind of JV is this?
So thank you, Mayur, for your question. I hope you're doing well. So yes, Mayur, this new joint venture is on account of antenna systems primarily for the four-wheeler industry. So just to tell you about the product, the shark fin or the antennas that you see on top of a vehicle or a car for connectivity, it is this product that we manufacture. Happy to and proud to share that we have won businesses from Hyundai, Kia, Maruti Suzuki, and of course there are other customers in pipeline whom we are waiting orders from. In terms of the investment, we have made somewhere about we will be making somewhere about 10 crores worth of investment, and this will be more so on the account of the production line transfer from Korea to India.
All right. So would be nice if you could share some more details on the JV. So is this like a 50-50 JV? Will we be paying a royalty to INFAC, or how does this work?
Yes, absolutely. So here we own 51% and INFAC has 49%. So we own majority here. So of course there is royalty like any other joint venture. Maybe I'm not able to disclose these numbers to you here, but yes, there is not a significant amount of royalty to be paid. It is in line with the industry best practices.
All right. And what kind of revenues should we look at, and in terms of will it be a typical margin profiling of between 10 and 11%? And what would be the timeline, the earliest timeline that we could build these estimates for?
Yes. So of course it is a four-wheeler product, and so of course the content is also higher. B, in terms of the overall order book, as I just now mentioned, as of date, we have lifetime orders of about 135 crores. Maybe by the next presentation, we'll be updating these numbers when we get the LOIs officially from other customers which are in pipeline for various other businesses. So, of course, the profitability of this is not going to be in line of 10 to 11%. We are expecting it to be higher. But because the import content, because of electronics, the first few months of the next year will continue to be a challenge. Post that, once we localize, it will start delivering higher numbers.
All right. And on your, operating efficiency, so we did hear on the opening remark that, the operating efficiencies came through, but you've seen a huge dip in your margin performance, and surprisingly, it does not come through gross margin. In fact, we've actually reported a better gross margin than previous quarter despite lower volumes. So I'd want to believe that there could have been a good pass on of the increase in RM cost. But what kind of level capacity utilization you would actually need to consistently maintain that 10% plus kind of margin run rate?
So, Mayur, right? Sorry?
Yeah.
Yeah. So, Mayur, thank you for the excellent question. So, of course, as I mentioned and rightly pointed out, the gross margin has increased in quarter-on-quarter basis. However, the capacity utilizations definitely continue to be a challenge here. Our product mix, as I mentioned earlier, for commercial vehicles as well as the profit from the aftermarket has come down here. And there's lag in commodity indexation that we have seen, and I've already explained before of this. Definitely initiatives such as the productivity improvement, employee performance, those have been challenged this quarter because of the reverse migration of employees going back to their in spite of below 50% capacity utilization, we've been able to generate positive PAT of 1.3%.
All right. So is it safe to assume that as you reach 70, 75, you could hit back the double-digit margin?
Yes.
All right. Thanks. That is it. Thanks.
If you also see in the last quarter as well, when we were more so on the 80%, 85% capacity utilization, we have posted strong results. So our endeavor is to go back once the demand picks up.
Sure. All the best. Thank you.
Thank you. The next question is from the line of Chirag Shah from Edelweiss. Please go ahead.
Yeah, thanks for the opportunity. I have 3 questions. The first on this localization. So when BS6 came, we were also hoping that we will be able to localize the content in wiring harness over a period of time and our margins will improve. Where are we in that journey? Because it appears localization is lagging and hence our gross margins versus what they were pre-BS6 era are lower. So this is for the wiring harness business. So that is my first question. And why is there delay?
So, Chirag, I hope you're doing well, first of all, and thank you for the question. As we've been explaining in last conversations also, localization continues to be our priority and we are well within our targets and journey. However, of course, due to the low intake of the customer, the low priority of the customer for testing validations of these components, they continue to be a challenge. Definitely, I will not maybe name the geopolitical issues and the import issues, etc., that might, create this. But our endeavor is to localize more and more. And as I can promise and assure you that we are very well in the line of our plan in order to turn around our wiring harness division in terms of connection systems and localization contents.
But can you shed some light? When do you expect the acceptance from OEMs? Are the interactions have increased? Is it still a year away? Because first they have to accept, they have to inspect, and maybe another 6 months it will take time for it to flow in our P&L.
So, Chirag, see, the localization is not only the factor. For our complete division, there are various avenues that we are working on. And to begin with is the copper or the raw material indexation. So we are again taken up a lot of strategic initiatives in order to reduce this impact as low as possible from quarter 2. Number 2, on account of productivity improvement, as I mentioned, we could see the quarter 4 results which are improving, but quarter 1 has taken a downturn due to the reverse migration and the efforts there. Third, on account of localization, definitely we will see quarter-on-quarter improvement. It is hard for me to share an annual number or a quarterly number because of the reasons just now mentioned. But definitely from a year perspective, we see about a 1% from the wiring harness division improvement. And let's say about 2 years from now or 18 months to 2 years, we see about 2% improvement in our wiring harness division Ebitda percentage, if those are the numbers you were looking for.
So this improvement is due to localization, you are saying, and not operating leverage benefit, right?
That's right.
Okay, this is helpful. Similarly, on this InFact JV, you mentioned initially the import content will be higher. Is it possible to indicate what part the import content is higher and hence how fast it can get localized? Because ideally, this shark fin business should be a reasonably high margin, at least high ROC business for us.
So, Chirag, see, firstly, these products are currently being supplied in Korea by our JV partners. So they are going to, and the same products will be supplied to the companies or the customers in India. We as suppliers cannot make changes because that calls for many technical validations which are required by the customer, which take time. Hence, going forward by end of the next quarter, we will be working towards starting supplies and validation from the Indian perspective to our customers in India. The SOP is planned about end of this year to begin with. And in our plan, what we have proposed is to localize these components by mid of next year. because these are some the regulations and of course customer requirements that after SOP of at least 6 months, then only a supplier can work towards localization. Regarding the components that are currently being imported, it is most of the assemblies related to electronics that are being imported from them. Again, mechanical parts are being already developed locally here. So to say about 90% is still imported.
Yeah, this is helpful. And just one follow-up on this inside JV. So I presume there is no restriction in approaching any customer, right? You could get business from, and who would be your competitors today in India? In Tata Motors or M&M or Honda or the other Japanese names, for example, everybody would be importing, and that would be the correct percentage?
So, to first of all share with you, there is no bindation to go to any customer. We are happy to serve all the segments and all the customers, including four-wheeler, two-wheeler, commercial vehicle, tractors. As I mentioned, with even our JV partner, we have won orders from Hyundai, Kia, Maruti Suzuki. Again, we are waiting for the LOI from 2 of new customers, and of course additional volumes and additional platform from the existing customers, which of course I cannot disclose unless I get the LOI, but the order is confirmed to give you that confirmation. Regarding our competition, of course there are few players from Korea as well as from Japan. Of course it's a public news, so you may look for yourself as well. And everybody is importing right now, and I can share with you that we are the company who has localized most in our BOM compared to others.
And the last piece of question was, well, we explained in fact very well. Is it possible to indicate about the other 2 new JVs, Ride Vision and that JV, in terms of what exactly the product will be, the revenue potential, and as well as our holding in these 2 JVs? That it would be helpful.
So the Ride Vision is not a JV. It is a TLA, Technology License Agreement with this company Ride Vision from Israel. So they are the only company in the world who is manufacturing camera-based two-wheeler collision avoidance system. As you know that again in India we are the only company to offer this technology. Of course there are various challenges and opportunities. From the challenge perspective is that the regulations. So of course government is working towards coming up with safety and ADAS related regulations, and we are hopeful that they will support us as well. We are of course requesting various bodies to support us and get this technology. Regarding the potential, of course, we are already in touch with the various customers. We have already demonstrated this product on road to our various customers, and customers are showing interest. Definitely, we have to do it. We have to do the local adaptation of the Indian environment. As we all know, our infrastructure is not the best compared to the world, but with the local expertise that we have, with the rain environment or dawn or dusk, as well as the other challenges, we are successfully now localizing this in terms of the adaptability. So we'll have to give us at least a couple of months time to adapt it to the local environment. In parallel, we are working with the customers, but more so looking at the premium product. It is expected to come in the high-end bikes or more so cruisers, which are pan India compared to the commuter segment. So this is what we foresee right now.
Chiraksha, does that answer your question?
Hello. And the third entity, sorry, I was on mute, because the presentation indicates 6 partnerships. So Ride Vision, in fact, and the third entity, if you can brief, it would be helpful.
So we have 6 partnerships, Chirag. First is the Stone Ridge, which manufactures instrument clusters and sensors, where we have 51% partnership. So this partnership is going strong. We offer products in terms of advanced electronics and technology. The second partnership is BAST, which is manufacturing 4-wheeler access systems. Here the partnership is 50%. This is a product line which is going forward, going to be on the premium side as well as the comfort and access. The third is the Silka, where it is into key systems or machining systems. The fourth is INFACT, which I just now explained. Fifth is Furukawa Electric, where we are manufacturing wiring harness for four-wheeler Japanese OEMs, where Minda Corporation owns 25%, and Right Vision is TLA, which I just now explained.
So I was referring to Silka. If you can just also brief the way you indicate on Right Vision. On Silka, what exactly the product is and how big the opportunity is and when we can see that flowing for us in P&L.
Yeah. So again, Silka is making the key, keys for our vehicle access systems, and again, it's a very insignificant amount in our own portfolio. Vikas will be happy to provide you details after this.
Yeah. Thank you. Thank you very much, and all the best.
Thank you.
Thank you, Chirag.
The next question is from the line of Apurva Mehta from AM Investment. Please go ahead.
Yeah, sir. Can you throw some light on, how is July and August is panning and what's the capacity utilization currently we are doing?
Yeah, thank you, Apurv. So July and August are good intakes, but as we know, the industry is still picking up. Four-wheeler or pass cars is doing, better compared to the two-wheeler and commercial vehicles. And of course, as our organization, we are about 50% comes from the two-wheeler space. So when we really look at the July and August numbers, we are expecting to go towards the 70-75% of our capacities, in order to service these customers here.
Okay. And on the keyless side, where we won orders, and what is your feeling and how are we, what's the customer feedback you are getting from different customers, and how are we planning to go ahead, and what is your feeling of getting more orders for this?
So Apurv, again, keyless systems is our most talked about product, and I'm very again proud to share that we are the world leaders in this. We have filed 21 patents only in the last year globally for this technology. So I would say that there is no other player in the world who is competing with us in this technology. Since it is a product which goes through premiumization and electronification, it will add content per vehicle for Minda Corporation in the bikes to come. To begin with, of course, we have won orders. I just now explained to you the recent significant order, which is one maybe a week or two ago from one of the largest or number one motorcycle player in the world for about north of 200 crores especially in the EV space. There are of course other customers that we are supplying to, and also happy to share that this is already into a start of production, into mass production, and we are exporting this product into Europe already with our customers. We are in discussion with various customers, which are again incumbent as well as new in nature. There are 8 current programs which are running with various customers whom we are engaging with, and the talks are in advanced stages, but surely we are hoping to get these orders soon.
So any wins for the four-wheeler side in maybe in export or in domestic, any wins on which likely wins on the four-wheeler side?
Yeah. So on the four-wheeler side, our joint venture company, Minda Vast, leads all these initiatives. So again, we have won orders from Maruti Suzuki and Toyota with the new upcoming platform in Bangalore. We've also won orders from Volkswagen India in such technologies, which is vehicle access in terms of outdoor handles, indoor handles, and other product lines. So, but the four-wheeler is catered by our joint venture company.
So on the keyless side also, that will be catered by joint venture company?
That's right.
Yeah. Okay. Thanks a lot, and wish you all the best.
Thank you so much.
Thank you. The next question is from the line of Rahul Jakwani from PGIM India Mutual Fund. Please go ahead.
Yeah, hi. I just wanted a view on this chip shortage and a semiconductor shortage. So, I mean, how do you expect that to impact volumes in this quarter going ahead? I mean, do you think utilization will still be low? I mean, what's your view on that?
Thank you, Rahul. A great question. I think this is a concern which is bothering at the global level, so to say. We can see big OEMs being closed for weeks and months around the world, and as late as Maruti Suzuki having challenges in Gujarat facility last week. So definitely this impacts the overall supply chain, and we are also a very integral part of it. In terms of the semiconductors and electronics, most is impacted in our clusters business, and rest we are not a big consumer of the electronics, so to say. Of course, going forward we will be, but as of the current state, we are not. We have taken various actions and activities to make sure that because of us, the customer lines do not face any issues, and rather we are extending our support to our peers also by various actions, which is unconditional and non-negotiable price settlements, non-cancelable and non-reschedulable orders given to suppliers. Lead times are extremely high, so which is suddenly increased from 26 weeks to plus 52 weeks. So we continue to find various new avenues. We've asked our engineering teams to come up with value-added and value engineering proposals, to come up with alternate proposals to offer these products. So there are various initiatives that are ongoing, which I think every supplier and customer jointly are taking, and of course we are also working with our chip suppliers as well as our esteemed customers.
Okay. And secondly, now we also have sizable cash in the balance sheet. So, have we formed up any plans for that?
Yes, Rahul, thank you again for the question. Rahul, we are very prudent in our M&As going forward. We have clearly created and listed down norms out of which we are not going to step out. More so these are directed by the board. So we are happy to have our cash in our balance sheet, but I know it is impacting us, but we will simply not go out and invest or do any acquisitions just by the pressure of having cash in our books. We are going to be looking at companies in our own area of expertise, in our own product domains. We are not going to do any acquisition in Europe or anywhere else which is having large operations or manufacturing base. That we are very clear. We are open to look at engineering centers and anything which gives us technology rather than only top line. Wherever our customers ask us to go, we will go. So there are various opportunities in hand, but we'll come back to all of you when there are something significant going to happen.
Okay. And just, can you help me with the gross debt number, end of this quarter?
So our gross debt is about 502 crores.
Okay. Thanks.
Thank you.
Thank you. Reminder to the participants, if you wish to ask a question, please press star then one. The next question is from the line of Abhishek Jain from Dolat Capital. Please go ahead.
Sir, how was the geography mix for the aluminium die-casting business in first quarter? And what is your revenue guidance from this business?
So you'll have to give me 1 second on that. So our die casting business in the Q1 FY22 has done about 122 crores. If I look at our Q4 numbers, we did about 50 crores of die casting business. So it is maybe of course impacted by the overall outlook of the industry, but going forward we have won significant orders in terms of our exports as well as domestic customers for the die casting per se.
So what is your revenue guidance for the full year from the domestic and export sides in aluminum die casting business?
So We don't give future guidances, but what we can assure you or what we can share with you is that this division would aspire to grow at a CAGR of about 15%, and we are looking at growing this further by our extreme and best relationships with our export OEMs per se, as well as with the lightweighting opportunities coming in the EV space, as well as aluminium content increase per vehicle is what we are focusing on. So definitely we would like to grow this division much higher. But again, looking at the global outlook scenario, we are giving you maybe a pessimistic to a realistic number of about 15%.
Okay, sir. And what sort of the capex you are looking from in this business?
So for this quarter, we have invested in this division, I think about 6 crore rupees for the die-casting capacity increase going forward. But again, our being prudent in nature for the capacity going forward, we are demanding and requesting our customers to maybe give us upfront or looking at shorter depreciation times rather than the long ones, looking at the various nature. But yes, this is a capital-intensive business which requires capex going forward.
Okay, sir. Sir, the company also started production from a new facility in Gujarat for the interior plastic division, and also expanded capacity in the Mysore and the Pune as well. So what is your revenue and margin target from the interior plastic division in FY22?
So our interior plastics division is growing significantly, and thank you for asking that question. So this year, last year we did very small, about 30 odd crores from this division. But more importantly, we won businesses for the first time in India as well as for the group in products such as advanced air vent systems with the new customers, such as Toyota. Also, we acquired first time businesses for our group like center consoles for the upcoming models of Maruti Suzuki from Gujarat. So this is going to be being manufactured in Gujarat. Start of production is going to be happening in the month of October, November. And this is, of course, significant increase in content per vehicle from the group perspective, as well as focusing on our exposure in the four-wheeler space. Going forward, we've also launched and won order for the oil pan, which is lightweighting from various engine manufacturers such as Tier 1s and other OEMs. We are working with them hand in hand while everybody is now focusing on lightweighting content per vehicle. We even strengthened our top leadership in the last month by getting two very known experts on board from the interiors and the plastic industry from India. Going forward for the next year, again, we are looking at tripling our revenue from the last year in order to gain big sales. We already have order books in hand for catering these requirements. Of course, we have to invest in these businesses looking at the overall opportunity, but this is surely going to give us return going forward.
Okay, sir. So my last question is related with the wiring harness margin. So in this business, RM inflation are paid by the customer with the lag effect of the 3 to 6 months. So however, in the past 6 months, copper prices has gone up significantly, but it still looks it is not passed on fully. So what is the margin outlook from this business going ahead? How much cost can pass on RM inflation impact?
So, as I mentioned earlier, we have a back-to-back arrangement with our customers, which is maybe somewhere 3 months and 6 months, like you pointed out. With most of these, again, if the copper prices continue to increase and the increasing trend, maybe an average of 15 to 20% every quarter, it becomes more so very difficult for us. Because of the lag that we get compensated from the customer. But internally at the back end, we are working on various strategic actions and activities which will reduce the impact and the losses for such RM increases. So this is what we would like to share. But going forward with the various activities on the profitability of the wiring harness division, we plan to come back to about mid-single digit numbers to high single digit numbers towards the next quarters.
Okay, sir. That's all from my side. Thank you.
you.
Thank you.
Ladies and gentlemen, that was the last question for today. I would now like to hand the conference back to the management for closing comments.
So thank you so much. I maybe now hand over the call to our group CEO, Mr. Ashok Minda, for giving closing remarks. Thank you very much.
Thank you, Akash. Thank you for your explanation. So I would like to thank all of you for joining us here today. If no COVID wave further or any under disruption, Minda Corporation will definitely do very well in financial year 22. And I would like to again thank you once again for all of you, and stay safe and healthy. Thank you. Thank you very much.
Thank you very much. On behalf of Dolat Capital, that concludes this conference. Thank you all for joining. You may now disconnect the lines.